Hi, this is Bill Wood from Disciplined Trading Decisions. I thought that the current market would give us a good example of Dow Theory. What is it and how can it help my trading? Let's take a look at the markets. But first, okay, welcome. We're going to be looking at Dow Theory. Number one, how it warns us of market changes. Number two, how it helps to keep you on the right side of the market. And number three, how it can be a simple method of trading. So let's take a look at the charts. Okay, the reason why I thought this might be a good time to go over Dow Theory is because if you look at these tops here, they're kind of similar. And one thing about major tops is that it does get quite volatile. Now, no two trading days are exactly alike, nor trading months. So this is the ES. It's a monthly chart. And if you look at this top here, you notice that we were going up strong. We had a really hard pullback. I believe that was in February of 2018. We just pierced the high and came back really strong. So far, we have not made a new high yet. And so if you look here, you could see that we were going up strong. We came down really hard, made just a slightly new high, came down really hard again, and didn't quite make it back up into this area of trading. Now, Dow Theory comes from Charles Dow, who wrote columns in the Wall Street Journal back in the late 1800s or early 1900s, and it was all about measuring trend. So this is my understanding of it. So we're going to take a closer look at this section here, and it was to help you to recognize a trend change as early as possible. So number one, you need to be drawing trend lines in order to know if there's a trend change. So this trend line here didn't do much good. You could say that that is the proper trend line, but this is where you finally got a warning where it was breaking that trend. But if we drew the trend line more like this, as the market got faster, you go from this low to this high and then take the widest point from those two. So the widest point would be right here. From that low to that high, the widest point would be right there. There's no other place where it's touching. So this is where it broke that trend line. So the Dow Theory would say, as you're making new highs, you can draw lines at the highs. And when you break the trend line, you draw a line at the low of that break. And so here's the trend. It broke the trend here, and you draw a line here at the low of the break, and you draw a line here at the top of the break. If it continues higher, then of course the market is still trending up. If it breaks this low, then the market has reversed its position. Okay, so if we looked at today's current market conditions, this is a log scale from the low to the high. What's the widest point in between? That's the widest point right there. You could say that this is where we broke the trend. So you put a line down here and a line up here. And if we close above this high and continue higher, of course the market is continuing up. And if it closes below this low here, then the market has reversed from an uptrend to a downtrend. Fairly simple, but it really warns you of market changes. It helps to keep you on the right side. And it's a simple method of trading. The great thing about this is that it scales. It is fractal. You can use it on any time frame. So let's take a look at an hourly chart. Okay, here is your hourly chart. So if you started from the bottom and went to this top here, you can see that it broke, and here's the widest point. It broke that trend line, came down, but it made a new high. So once it makes a new high, you come to the widest point, that would be here. It broke that trend here, but immediately turned around, made a new high. Now this is the widest point, broke that trend, made a new high. Okay, from the low to the high, this would be the widest point. So we broke that trend there, but it continued higher. From this low to this high here, you can see that it broke the trend here and then continued down. This was about a 5-day downtrend. So we made a new high, and if we connect to the widest point right here, you can see that's kind of where we're at right now. So we're testing this uptrend. So a closer look, we could take a shorter time frame and go from low to high, which would be right here, saying that this broke the trend right here. So we're really interested in this level right here, because on one time frame this would be a change of trend on the shorter term time frame, and longer term time frame it would be breaking this longer term trend. So this is what the same trend line looks like on the daily chart. And if you notice where we came up to, this was our breakdown point. You could say that this was a sell zone, a breakdown point, a low volume node, whatever you want to call it, but that's exactly where it came up and tested and reversed sharply. So not to confuse things, let's get rid of this line here and get rid of this line here. And for this trend line right here, what we're looking for is a break of the trend line, a pullback, then we would draw our new line here, and as it breaks that line, that would be a reversal of this uptrend. On the weekly and monthly chart, we're looking for a reversal of trend all the way down here at this low. So one last time, from the high to the low, the widest point, and again this is a log scale, would be right here. That would be the widest point. We broke that trend here. This line here would be the reversal of the trend. The one last caveat that Dow Theory would hold is that there needs to be a confirming market. Now, Dow used, of course, the Dow Jones Industrial Average and also the Dow Jones Transportation Average. So this is Dow Jones Transportation Average. You can see that we pretty much broke the trend at the same time. This would be our reversal of trend line. This would be our continue of trend line. So if the main market falls below this line and soon before or soon after this market also falls below this line, that's a confirmation that the trend has changed. So just a quick recap, this is Dow Jones Transportation Average. You draw a trend line from low to high, the widest point, that would be right there. You can see that the trend was broken here. You draw a line at the bottom of that trend break and at the top of the market. And as you can see, the market continued higher in this case, which continued the uptrend. So what happens then, you redraw your trend line anytime it makes a new high. You redraw your trend line, market continues, it breaks, you draw another line down here. This would be a change of trend line, and that's a continuation of trend line. So that's Dow Theory in a nutshell as I understand it. I hope that was a help to you. This is Bill Wood, and if you're watching this anywhere other than my blog at disciplinedtradingdecisions.com, please go there now and check out our other resources. And while you're there, sign up for our weekly newsletter. And this is a reminder to trade according to your trade plan. Don't do what I do. You have to believe in your own analysis of the market in order to stay disciplined and true to your plan. Hey, I really appreciate your likes, your comments, and your shares. It all helps to get the word out. And remember, stay motivated, stay focused, and stay disciplined, my friend.